Let's talk about India versus the US valuations, right? Because India is trading at what, around 21 times forward earnings with only 8 to 9% EPS growth, while the US, despite its massive size, is delivering close to 25% earnings growth. Do you believe India's valuations are still justified, or do you think we're at a risk of being structurally re-rated downwards?
So, well, the Indians have been buyers at the margin in India, right? You've seen this incredible amount of foreign selling. And to just put in context, I'll share some numbers people think it's very patriotic to only look at India and not look elsewhere in the world. And we've sort of become frogs in the well, I feel. But to just put in context, the big 6 US tech firms, not Netflix and not Tesla, but the other 6, Nvidia, Microsoft, Apple, Amazon, Google, and Facebook. Last year, I think 12 months trailing, have made a profit after tax of about $500 billion US dollars. The entire Nifty 500, I think, makes less than $200 billion, just for context. And these guys will probably be at 600 billion, just these 6 companies, next year in aggregate. And they trade between 20-25 times. So if you're, a large money manager in the world, and you see something which is game-changing happening in the world, growing at 20-25% on that size, would you rather put money and own, Amazon, or would you, own India? And that's the sort of trade which seems to be going on. Secondly, even if you don't like the US, you've seen for 20 years now that gold has kind of tracked the returns of the Indian equity indices. So would you rather be in gold, or would you rather be then in the Indian equity indices? And therefore, when you come down to India also, you realize the problem that we've, hit on the Nifty, that a lot of our favorite sectors, like IT, Gautam was talking to you before I came on. It seems to be the case that the next 2-3 years will be like Y2K moment, where the Indian IT sector has to organize the data sets for people, so that then the AI can start using that data to make these companies a lot more productive. And again, just to put in context, while the Indian IT sector also trades at 20 times, and they are probably growing at 5-ish%, something fantastic is going to happen in the coming year, 2027, where I believe the profits of SBI will cross that of Reliance. The profits of ICICI Bank will cross TCS. And the profits of Axis Bank will be crossing Infosys. And that kind of dramatic shift which is happening is going unnoticed in the market because of this whole narrative of, banking has slowed down, NIMs and capital market plays and so on, which is, of course, also a reality. But this composition of our index is slated to change very massively. And these new age companies which are coming in, and again, I may not agree necessarily with all the valuations, but the index of India will also have to go through some kind of reconstitution over the next 2 years. And therefore, most of the action which is now happening is happening outside the index, or it has to take place eventually in, the financial space, whether it's banks or NBFCs or capital market plays or insurance or what have you. And of course, the tech names within the financial space as well. So that's the sort of way one should presumably think about what's going on over here.